Buy the breakout is a trading strategy where the trader takes advantage of the price moving above an area of resistance or below an area of support. Which one is the safest entry from this diagram? A, enter on the breakout itself. B, enter on the pullback to support after the breakout. C, enter the break of the swing high as confirmation. So the price comes up, retests, and then we wait for it to break above the previous high of the breakout. Which is the safest entry? A, B, or C? The answer is C. You would enter the break of the swing high as confirmation. Let me explain why this is the case. So let's take a look at A. When you enter the breakout itself, you're essentially buying in to the midway point of the price move. This is higher risk because the price action could quickly come back into the pattern. So this is higher risk. So looking at B, you would wait for the price action to come up and then retest the resistance line, flipping it to support. This is a pretty safe entry as there's a lot of buyers will turn up here, and it gives you an opportunity to check that the price action isn't going to come back down into the pattern like it potentially does in a fake out with A. So looking at C, this is the safest, but it doesn't always happen. So you would enter the break of the swing high as confirmation. So you'll watch the price action break out, you'll wait for it to retest and flip resistance to support, and then you'll simply buy in when the price action surpasses the breakout high. This is the safest option, but it doesn't always happen. Now, which one you choose to use depends on your trading style, but it's also about the market conditions. So in a bull market, when you've got a lot of upwards momentum, when you have breakouts, A is actually a good option for a bull run because a lot of the time the price action will just break out and continue higher. B is good for all conditions because you get to, of course, confirm the support resistance flip. But in a full-on raging bull market, you don't necessarily get that retest, at least not initially. And likewise with C, if you don't get that retest, you don't get the opportunity to enter the break of a swing high because the price action essentially just keeps going. So you have to adjust how you buy the breakout depending on the current market conditions. To see what this looks like in the real world, this is Auction, a previous top altcoin pick. When I posted it, the price action was about here, and I was telling you to buy the breakout of this symmetrical triangle. So the price action has broken out. It broke through this resistance line and then got stopped at this resistance line. That was 20%. And now we have come back down to retest this trend line, essentially flipping it from resistance to support. This would be a great and safe entry in the price action. But this is essentially what buy the breakout looks like. So if I was to trade this using strategy A, so strategy A would have involved waiting for a candle body close above this resistance line, which we got here. If you see, the candle body was just above the resistance line. Strategy A of buy the breakout would involve entering a trade here. If we had done that, we would have, in this particular trade, we would have had about 15%. But if we were using strategy B, in this case, we would have actually got less. So strategy B would be buy the retest, the flip from resistance to support. So the price action breaks out, the price action then comes back down. As you can see, it retests this line here just about, and that's where we would have entered for strategy B. In this case though, the price action did not manage to surpass the previous breakout high, so we've only had 9% compared to the almost 15% of the initial breakout. If we were using strategy C, this trade wouldn't have been viable because we would have been waiting for the retest and then the price action to surpass the previous high from the initial breakout. We didn't get that, so we wouldn't have had a trade here, which is why C is the safest, but it doesn't always happen. You have to decide which one of these strategies works best for you, but also works best for the current market conditions. A is higher risk because of the potential for a fake out where the price action comes up and then drops back down again. B is a good balance between risk and potential, where you're essentially entering on the support and resistance flip. And then C, even though it's the safest, it doesn't always happen. so you miss a lot of opportunities. You have to decide which one to use based on the current market conditions. So paradoxically, even though A is excellent for a bull run because the price breaks out and just continues higher because there's a lot of upwards momentum, it's also good for hesitant markets because the price action will just break out, traders will capitalize on that singular move, and then they'll sell off and then go and find another trade. The retest may happen, but the bounce isn't very strong, and therefore you've missed out on the potential profits of using strategy A. And then C just doesn't happen at all because you have the initial breakout, it doesn't break higher, and it just rolls over or just continues to consolidate. You decide though which works best for you. In the next video, we will be looking at chart patterns and how to use them in trading to identify reversals in the price action. So stay tuned for that. Until then.